welcome to Your Time, Your Money, the show where your time is just as valuable as your money, and we know that. We thank you so much for listening in today, and welcome, Adam.
Good to be here.
Yeah, excellent. We have a great topic today, and really we wanted to point out maybe some ideas of why you should be calling your advisor, right? That whole concept of my advisor doesn't call me or I haven't talked to my advisor, that really should be a moot point because it should be a two-way street.
Correct.
Right?
Yep.
Clients should be calling us, if not more often, than we call them for services because, unlike a crystal ball, which can see everything,
Right.
we can't see what's going on with the client's life.
Right. And we were saying that, there's no spidey sense for us, right? We can't tell when something has happened in someone's life without a lot of times having the information presented to us. So
yeah, exactly. So I figure we touch on some of those topics, but I think first, before we flip the hourglass here, I'd like to kind of just let our listeners know about a new thing that the Essley Group has come out with that we've been sending out to clients, and that clients will be receiving, at least over the course of their lifetime with the Essley Group. And I'm proud to announce that we have the start of a magazine that'll be going out to clients. So clients should be receiving this, at least once a year. And it's not your typical financial magazine, which is what I like about it. It does have a little bit of topics of the Essley Group. It allows us to highlight key points that we have coming up, whether it's events and stuff like that. But really, we wanted to send it out as an appreciation of clients. Where in here we have lifestyle habits. There's in this article we have the power behind speed walking. Right. Well, the power would be your feet, but no, it's a really nice. Really nice article in here. There's also things that talk about how to have a safe move if you're moving between new homes and into retirement or whatever that might be. There's a little bit on the mental and health benefits of martial arts, and then it's also chocked with my favorite, which is recipes. So lots of family recipes. I don't know whose family, it's not ours, but there's some good stuff in there.
The eggplant caviar.
Yeah, and the nice thing at the end of it is there's also a tear-off that if you happen to know other people in your family or coworkers that can benefit from our service, that you can tear this off and give it to them as a resource for what we do. So we're excited about that.
And look, there's an ad for Your Time, Your Money.
Yeah, exactly, which is a great thing. And it's very, very very important that clients understand that we try to go above and beyond with providing resources. And it's not always just about investing and where your money should be. It's also about the health and lifestyle issues that people have as well. We want our clients alive to enjoy retirement. And one of those things is health. So let's get into reasons that you should call your advisor. I'll let you do the honors and flip the old hourglass here.
There you go.
A lot of times people think I need to call my advisor when it's centered around finance. Right. And with that, unfortunately, it's I got a statement or something went on with the market or, I have a question about my account.
Prepping my taxes. Can I get my 1099s? We get that a lot. That's a pretty common call, especially this time of year. But
and every year 1099s are sent out the exact same time and take the same time with every firm across the board to get to a client's household. But it's on the top of their mind, right?
Sure.
They're anxious to get the information to their accountant. Maybe they didn't see it in the mail yet. A lot of times we'll get a call. And then the next day we'll get a call from the same client and said, "Oh, I got it in the mail today."
Right.
So it's usually right around that time when they're being sent out. But let's start with some of the things that maybe aren't as obvious or reasons that you should call your advisor right away. And that's a major change in your life, and that would be a change of job.
Sure.
Right.
Yep. And that's very common that we don't know about that until we reach out to do an annual review. Oh, how's everything going with the job? Oh, I got a new job.
Yeah, I left 6 months ago.
Right, I left 6 months ago. Yeah, it's very important for us to be constantly updating our information to increase our knowledge of what's going on.
Yeah, for a wide array of different reasons. One, you want an advisor's help in establishing your new 401k plan. Maybe understanding your benefits a little bit better, especially if maybe a benefit dropped off. Heaven forbid you're close to retirement and the new position doesn't have health benefits. Now we have to create an income stream to help provide for health benefits for you. You have your old 401k there. You have your 401k that may not be transferable to your new employer, or you may not want to transfer it. Right. So there's a lot of issues with that.
Sure.
And, it could be maybe there's a severance 6 month severance, a 1 year severance, on top of the fact that now you're starting a new job and having an increase in salary. And maybe you want to do some planning with that asset as well. What are some other things that a client might want to call us on?
Oh, I don't know. Getting married?
Oh, that would be a big one. That's another big one.
Yeah.
A lot of times, we know that a couple's engaged, and then all of a sudden, 6 months, we got married 6 months ago.
Right.
And we sold our house, and we combined our assets, and we're moving in together.
You got to remember the old rule, right? First comes love, then comes marriage, then comes a baby and a carriage.
Yeah, the IRS with a different rate.
Right, tax rates, exactly.
Tax rates change.
Yep.
So should your filing status. So should your exemption status on your, your payroll, your paychecks and things along that line. So there's a lot of things and planning concepts centered around marriage that you're going to want to talk to an advisor about, especially when you're talking two separate lifestyles, two separate retirement pictures and portfolios merging together. Right, because that's not easy.
Sure.
And some people have no assets and they're marrying somebody that has a lot, and vice versa. Some people have, both have high assets or both have nothing.
Right.
But it's a good time to revamp and relook at your budgeting strategies and what's going to be shared, what's not going to be shared.
Combined with that, correct. Yeah, and I was going to say, when you have people that are used to living separate bank accounts, used to paying their own bills, and all of a sudden everything's combined. And, or can be. I mean, we still have married couples that keep things separate, but for the most part, people combine.
Well, I know I have sometimes walked into a married household, and they've been married for 7 years, and they still have 13 different bank accounts between different banks.
Yes.
Well, why was that? Well, that was just how it was before we met.
Right.
And it's maybe not the most efficient. And
this one's for my mortgage. This one's for my car payment.
I've been meaning to get to that. This was my old student loan account that I had. Well, you still have your student loan? No, but I kept the bank account. So that's a good refresh point. And then the next big thing is obviously, like you said, then comes the baby carriage, right? It is kids.
Yep.
You definitely want to talk to your advisor, especially. I would say even before kids, right? I would say as soon as you find out you're pregnant.
Right. Yep.
Right, because your life insurance needs are instantly going to change.
Right.
Whether it's adding a term policy, something that's very affordable with a lot of coverage, especially at that early stage, because if you get into your last trimester, a lot of companies won't insure you.
Right.
So if you wait too long, and a lot of complications do happen, unfortunately, at the tail end of pregnancy.
Yeah.
And we want to make sure that we start that discussion of college planning, start the discussion of expectation, right? So that would be another reason that you pick up the phone and call your advisor just to let them know.
Sure.
Whether these ideas deem an appointment or not, it allows us to enter that into our system so that we know that your lifestyle's changed.
Right.
And start, maybe marketing things to you that are gonna be important for you later down the road.
Sure.
There's clients where they don't have any kids, nor will they ever have any kids, and we purposely don't mail them college planning information.
Sure.
And then there's other clients where we know, hey, look, they're in the beginning stage of life. This is important to them. This article or this, news article or something like that's important to them. So,
and some of these habits that we help our clients to start getting used to, a lot of those will change. And what I mean by that is like savings habits, right? Again, when you are these different stages, whether it's a change of a job or a marriage or of a child coming, there's savings habits that need to change sometimes. So just, again, having that discussion.
Yeah, and just as the happiness of the birth of a child, you should call your advisor, same thing with the somber nature of somebody passing in your household.
Yes.
Right?
Yep.
Too many times I see people call us after they've received an inheritance and after a attorney or a CPA told them, hey, just liquidate the money out. Just send it to the escrow, we'll divvy it up. And they're put in either a bad tax situation or the investment that they had they can't get back into now. So you really, the minute that you understand you're receiving an inheritance, there should be a call to the advisor so that they can start piecing the puzzle together of what should be liquidated, what shouldn't, what should maybe be kept in your name, what's more beneficial to keep in your name. That's unfortunately a lot of times we get that call after all the securities have been sold, moved, or whatever, and they've lost some good cost basis information. They've lost some, good detailed stuff that they need.
Well, and even to that point, sometimes, oftentimes, our client may not be the one that's, the making the decision on that inheritance. It could be a sibling, and all of a sudden, well, my brother's handling that. Oh, okay. Well, that still should you should still give us a call so that we can address what steps that they should be looking at.
And it's also important because we need to know the date of death right away.
Yep.
Because if we're sending money out to that person that's deceased, a lot of that might take time to cancel the payment on that check or that thing and reissue it back into the account to go to the beneficiary. So the sooner we can catch that, the better it is than letting it go 6 months, and 6 months worth of dividend checks have been sent out, but none of them are cashed. And now we have to go back and cancel them, make sure they get credited back to the account at the price per share of when they were sent out.
Yeah.
Right. And so
a little
there's
bit of legwork there.
Yeah, a lot of legwork there. Another one would be involved with the sale of a property, right? Or a move.
Sure.
It doesn't necessarily need to be a move, but sale of a property, proceeds come in. Maybe there's a limited period of time where you don't know what to do with the money. Well, ever thought of 3-month CD? Ever thought of a, you know what I mean?
Right.
So, the worst thing that can happen is people don't act because they're uncertain.
Right.
Right.
Well, and just in terms of a sale of property, oftentimes our minds go directly to land. But I've had clients that have had collectibles, collections, and they're whether it was their spouses and their spouses passed away, and then they had this collection and decided to sell it, which is fine, of course, but letting us know in the dialogue to understand things like cost basis and what that could look like on a potential tax liability. And options within to kind of help mitigate that issue. So
and in lines with the birth of a child or the death of an individual, you also want to call the advisor to update your beneficiaries.
Yes.
Right, for all those different reasons and other reasons as well. Right, we run in situations where maybe you got divorced, and you forget to change your beneficiary, and you pass away, and your ex gets everything, and that's not necessarily the person you wanted. Right. Or you have a beneficiary on there that maybe's already in a nursing home. Maybe they already need care, or maybe they're a disabled child and they shouldn't be on there because the child became disabled after you put them on there. Right. So just update beneficiaries in any major life event that's going to change beneficiaries.
You actually just thought of one that made me think of one that we didn't have on our list yet, which is a diagnosis of change of health. Right, where maybe a spouse all of a sudden is diagnosed with dementia. And they may not be a top of mind to call your advisor on that, but it's an important one because we can help aid in getting certain documents set up so that if there's not an issue down the road.
Just because you brought it up, let's go a step deeper. When we're dealing with somebody that has a cognitive disorder or disability like a dementia and Alzheimer's and stuff, there's security and safety things that the financial industry can put on accounts to make sure that person doesn't get taken advantage of by somebody else.
Sure.
And that could be because of age as they get older or whatever. So that's even more important. That is, the minute you find out somebody's diagnosed with that you call your advisor, because the safety measures that they can put in force to make sure that the right people are making the financial decisions for that person are very important. But a lot of times, a year, 2 years go by, and maybe it's a little embarrassment. Maybe they don't want to mention that, like, hey, my husband has Alzheimer's now, and we find out later. That's a danger period. Heaven forbid somebody says, hey, you should liquidate your money, and you're not around to protect them from that idea.
Right.
And, with those disabilities, they may do it and call up. Well, if we don't know that, we're going to follow the order of the client.
Right.
So you want to make sure trusted contact person's on there and what have you. Another reason to call, right? Promotion or demotion.
Right.
Right. Obviously, anything that's going to affect your cash flow into the house.
Right. Your income of some kind,
you
up
get
or
laid
down.
off. Let's say you lost 10% of your pay, right, through cutoffs or new job, or your investment, your monthly money going into accounts should adjust. Same thing going up.
Right.
Right. Obviously, we want to put more money away. Scratch off, lottery, winnings, anything along that lines.
Yep.
Right.
Lottery winnings, as you said, that's these are all, by the way, things that we've come across. Right. This isn't just a crazy list. We've had clients that have won the lottery, and there's a lot of ways of process to be able to claim those tickets, and again with
reduce the tax drop.
Reduce your tax, So again, it may seem like a shot in the dark, but it does happen.
Yeah, so. And for us, it's been scratch-off games.
Yeah.
You know what I mean? So, and that's been that's happened a couple times in our careers where we're talking, over $1 million.
Yeah.
Our clients won on a scratch-off game.
Yeah.
And, in one case, they didn't call us right away. In another case, they called us right away, and there's drastically different plan measures that could be done.
Yes.
Yep. and it's, they call us after they've lost 40-some% to the state and
Right.
federal government.
Right. Yep. And there's no judging, right, with any of this stuff. It's not our position or job to judge whatever has happened. It's our job to help you deal with the next steps of the situation.
Give you options so you're more informed, right?
Correct.
And that's the most important part. Perhaps maybe it's a gift to or from. Maybe you received a gift from a great aunt or somebody, or maybe that you're thinking of gifting somebody money. Right. Call your advisor.
Yep.
Because where you take it from is just as important as how much you'd give.
Yep.
And you want to know, is this the best benefit for me, or is there a better way to give?
Right.
I think of gifting in the lines of charity as well. So it doesn't necessarily have to be to a sibling or kid or niece or nephew or anything like that. But you should call your advisor when you've increased your donation to a nonprofit.
Right.
A tithe through a church.
Yep.
Gifting to American Red Cross, gifting to Northeast Kidney Foundation or any of the organizations out there. Talk with your advisor maybe about more creative and efficient ways to give. Right? Something that you normally wouldn't think about calling up the advisor on, but really you should have a conversation with an advisor about that, because there's a lot of great gifting things that are out there and programs and way to gift that weren't out there 10 or 15 years ago.
Sure, even tax advantaged, like for example at an IRA where it's typically taxable income. Well, there's an opportunity to gift to your favorite charity if you don't need the income, but gift to your favorite charity without a taxable implication. So
yeah. So another thing is the minute you go and meet with an attorney or a CPA, you should contact your advisor. You should ask questions of, hey, is there anything I should be asking in addition, or anything that you see I need to do in that estate plan or that tax plan?
Right.
To give some advice and guidance. People are under the misconception that they go to a CPA and the CPA is going to be proactive, not reactive, in giving advice and guidance on what they can do. They're usually not.
Right.
Same thing with an attorney. They're usually not. They're going to base their recommendation off of what you tell them.
Right. And a lot of it is because they deal with the past, whereas we are looking at the future. What is the next step moving forward? Whereas a CPA is going to look at, well, let's take a look at what was, income and et cetera from last year. So oftentimes it's just a matter of the mindset and making sure that your professional information that you're getting is from the right sources.
I'll give you an idea. I'll give you an example. So a client called me and said, hey, Mark, we're going to see an attorney. Are there things that we should be looking at or whatever? And we went through probably a dozen different things, and they were in agreement. They're like, oh, yeah, we were going to talk about it. And then just an aside, I said, and don't forget you have that timeshare that you inherited a couple of years ago. And they totally forgot about that and would have not brought that up to the attorney.
Right.
But it was important that they did because it's part of their estate and how to handle it. Yep. So just in the conversation with me, they had an item that they totally would have left out and forgot about. Yeah. And that happens quite often because you get in a professional setting, maybe you didn't bring all your documents, you're not thinking big picture, you're just thinking, I need to get this, this done, and things slip through the cracks.
Yep.
And don't be afraid to call your advisor and invite them to it.
Yeah.
Invite them to the meeting.
Yeah.
Have them go.
I thought you meant to the timeshare.
Well, that all,
invite him to the
depends on where it is.
Right.
Cold during the winter? Probably not.
Work on tan lines, it's
very, very important. And then also, I want our listeners to feel like with the Essley Group that they can just call and ask general questions.
Yeah.
About things that they got in the mail, things that they received that they don't understand. The one thing I think that the average person needs to understand is an advisor is not privy to every piece of mail that's mailed to the client.
Right.
Because you have compliance departments, you have legal departments, you have back office departments, you have regulatory requirements. You have all these different things that trigger mail going to a client.
Yep.
Right?
Yep.
And every company, no matter what company you're with, they're going to inundate you with a lot of mail. Doesn't matter where you're at.
And 50% of the time, probably, it's going to be language that is not familiar for the average client. So
disclosures, prospectuses,
right.
things along that lines, which are just as important, but not necessarily need action.
Right.
And when we look at the amount of stuff that goes to a client, it might just be a letter. And if you don't understand it, the worst thing you could do is just sit on it and assume that the advisor knows the letter that you got.
Right.
A lot of times a client will call me and they'll be like, I got this letter, I don't understand it. And the first thing I'll say is, can you read me the letter?
Right.
Because when you have a lot of households and you don't necessarily know what the letter is in regards to.
Right.
And sometimes it's just a general blanket letter that goes out to everybody that owns an IRA.
Yep.
And it'll say you need to take your required minimum. But you know what? We've already set that up automatically, but they're still going to get the letter.
Right.
So, so I think clients need to understand that it's okay just to call and ask the question about something.
Yep.
Really this is where a client should be calling an advisor more than an advisor is calling them.
Right.
In a good relationship, you're calling your advisor just as much as they're calling them, if not more. Right. What are some other things that you can think of that would spur on a call?
When people start up a business, it may not be maybe they've got a full-time job, but they start going into another area and they start a business along with their regular job. And oftentimes they need startup money, but maybe they don't know the right place to take it from or what direction to take on that next step of opening their business.
Yeah, that pre-planning call would be very important.
Sure.
Especially at least in our group, I know a lot of advisory firms, they just focus on the investments. Our firm networks with a lot of other professionals, real estate agents, business, attorneys, you name it across the board. Pretty much everything in line with starting a business, we probably have a professional referral.
Sure.
That we can refer somebody on to. So, just tapping into your advisor's resources and network of professionals is valuable for that business owner. Yeah. Right? Or it could be any opportunity that comes up. It could be the opportunity to buy a rental property. It could be the opportunity, to acquire a timeshare.
Right. Or that toy collection that your other client is selling, whatever. Whatever it is.
Yeah, exactly. So, I think the point of today's session was to really focus on the amount of times in your year, in your life, that you should be reaching out to your advisor and being proactive with these types of decisions. I mean, we could probably spend another half an hour, 45 minutes talking about things that you should be calling your advisor on and topics and stuff like that. But I think that does a nice, overview of really the main topics.
Sure. I guess when in doubt, give us a call.
Yeah, when in doubt.
We'd rather have a call than to find out something way past when we could have found out about it and then could have helped in other, in the situation.
And back to my point with having a professional network of other individuals is sometimes when we get calls in, it's not for a topic that we can handle.
Right.
But we have a resource that we can refer them on to.
Yep.
And it's like, oh, well, we don't handle that, but I have somebody that can answer your question for you.
Right.
And, that's very empowering because now the client knows, like, hey, one, we're being honest. And if we don't know something, we're going to tell them.
Yeah.
And two, they don't have to go into what used to be the old Yellow Pages phone book. Now it's Google. Right. And just come up with a random name to help solve their issue or answer their question.
Yeah. Yep.
So, and as always, you can find the Esley Group at 43 British American Boulevard in Latham, 12110. And our new number, it's 844-444-YTYM for Your Time, Your Money. As always, yourtimeyourmoney.net for your net worth. Like and subscribe, share, helps us on social media, make sure that we're getting the topics. And this was actually a topic that was sent in by a client, so keep sending in those topics, and we'll keep modifying our episodes to the topics that clients want to hear.
Yeah.
And as always, it's your time,
your money.